Hello and welcome to TaxPundit.org. TaxPundit is India's most popular and trusted database of income tax case laws. In today's video, we will be analyzing a landmark case study that provides critical insights for tax professionals. Let's dive right into the details. The case under discussion is DCIT vs Dharmdeep Commodities Private Limited, pronounced by Ahmedabad Tribunal on the 26th of May 2026. The assessee, Dharmdeep Commodities Private Limited, engaged in trading cotton bales and commission agency, filed its return for assessment year 2014-15 declaring income of Rs 98,32,060. The original assessment under Section 143(3) on the 25th of November 2016 accepted the returned income without additions. Reassessment proceedings were initiated under Section 147. The assessing officer added Rs 4,66,57,670 under Section 68, treating commodity transactions through broker Messrs Anand Rathi Commodities Limited on the NSEL platform as non-genuine due to client code modification involving original clients like Navratan Malgupta, Ashrit Holdings Limited, Borosil Glass Works Limited, and Shirish Raj. The assessee contended that transactions were genuine, executed in the ordinary course of business, with no knowledge or instruction about C-Circa M contract notes, broker ledger accounts, and bank statements evidenced payments and receipts. The profit of Rs 17,59,312 from all such trades was already offered to tax in the original return. The CIT, following the ITAT's earlier order in the assessee's own case, ITA number 398 Ahmedabad 2023 dated the 24th of June 2025, restricted the addition to the profit element of Rs 8,33,212, the balance profit from trades covered in the second reassessment. The CIT also deleted the consequential penalty of Rs 2,17,331 under Section 271(1)(c). The ITAT emphasized that the issue was identical to the earlier reassessment proceedings for the same assessment year, involving the same broker and NSEL platform. The coordinate bench had already held that the entire transaction value cannot be added under Section 68 solely on the ground of C-Circa M. Only the profit element embedded in such trades is taxable. The assessee demonstrated that purchases were matched by sales, and the entire flow of funds was through banking channels. Contract notes were issued in the assessee's name. The ITAT held that in CCM cases, the transaction value cannot be treated as unexplained credit. Tax can only be on the net profit, not the gross turnover. The assessee had no knowledge of the CCM and acted bona fide on the basis of contract notes. The broker is a registered entity, and the assessee had no control over internal trade allocation. Documentary evidence was not controverted by the AO. The profit element was already offered to tax, negating tax evasion allegations. Since the quantum addition was sustained only to the extent of Rs 8,33,212, already offered in the return, no concealment or inaccurate particulars were established. The penalty under Section 271(1)(c) was deleted by the CIT as meritless. The ITAT upheld the deletion, stating that penalty proceedings are consequential to quantum addition. The profit of Rs 8,33,212 was already part of the total trading profit offered to tax in the original return. The tribunal did not disturb that finding. Thus, no separate addition was warranted. If the AO had already taxed the profit in the original assessment, no further demand would arise from the restricted addition. The ITAT dismissed both appeals filed by the Revenue. For ITA number 1966 Ahmedabad 2025, Quantum, the order of CIT, restricting the Section 68 addition from Rs 4 crore, 66 lakh, 57,672 rupees 8,33,212 was upheld. For ITA number 1967 Ahmedabad 2025, penalty, the deletion of penalty of rupees 2 crore 17,331 was confirmed. Question: what is client code modification, CCM, and why did the AO treat the transactions as non-genuine? Answer: client code modification refers to the broker changing the client code after the trade is executed. The AO alleged that because the original clients were different, Navratan Malgupta, Ashrit Holdings, etc., the trades were not genuine, and the purchase amount was unexplained cash credit under Section 68 of the IT Act. Question: what relief did the ITAT grant to the assessee? Answer: the ITAT upheld the CITA's order restricting the addition to the profit element, rupees 8,33,212, instead of the gross purchase value, rupees 4 crore 66,57,670. The penalty under Section 271(1)(c) was also deleted. Question: why did the ITAT follow its earlier order in the same assessee's case? Answer: the earlier order, ITA number 398 Ahmedabad 2023, dealt with identical facts for the same assessment year, same broker, same NSEL platform, and similar CCM allegations. The principle of judicial consistency required the tribunal to adopt the same view. Question: does this ruling mean that all CCM cases will now be considered genuine? Answer: number the ruling is fact-specific. The assessee had no knowledge of the CCM, provided documentary evidence, and had already offered the profit to tax. If revenue proves the assessee's involvement in or benefit from the modification, the entire transaction value could still be added under Section 68. Thanks for watching this video. You can download the full legal analysis, the official case law, and a concise case digest PDF directly from our website, TaxPundit.org. If you have any questions, feel free to write to us at TaxPundit@TaxPundit.org or message us on WhatsApp at 9326306668. Don't forget to subscribe to our channel for more authoritative legal updates.